Ladies and gentlemen, we are back with our monthly Matterhorn interview, and today it's really a harsh fight against the technology. Egon, I'm glad to see you after 2 months, and it seems you are back in the Swiss Alps. How are you?
Yes, I had to check that the background was still there, and yeah, I'm very well, thank you. I'm better than the world economy, which is not difficult for anyone, and I feel good about life and about what we're going to discuss today, which will hopefully be useful for our audience.
I think so, and glad to hear that. What are we talking about today, Egon? The markets, bonds and banks, precious metals. And then there is a very interesting observation from China. Means the premiums on gold are there really skyrocketing. Maybe a message for what has to come to the USA. Now let's begin with a message of Jamie Dimon, the maybe Demon, the JP Morgan Chase
Diamond,
boss.
yeah,
Diamond, I know.
diamond.
What did he say? He said, I wouldn't be a big buyer of a bank. The head of the largest lender quipped during a financial conference on Monday. To say the consumer is strong today, meaning you are going to have a booming environment for years, is a huge mistake, he said. I think there's a false sense of security that those who think will end up being okay. I don't know, he said. I think, Egon, that is admitting the obvious, and it seems Demon is even now cautious that something, as we know it already, is brewing in the banking system and the consumer.
Jan, we must remember that obviously he's been very successful in running JP Morgan for a long time now, and stayed at the top of the banking system. And obviously, any US bank who is in that position also totally controls the Fed because they tell the Fed what to do, not the other way around. And as you remember, in 2008. JP Morgan was bankrupt, and so were many other US banks, and they were saved by the Fed because they were told by the bankers that they didn't save them, then that would be the end of the banking system. Now, we must also remember that JP Morgan has I think it's about 70 trillion of gross derivatives. Um, that is just a massive position. Of course, they say net is the risk is much smaller, which it is, but the problem is that if counterparty fails, then the gross risk can remain gross risk. So he's clearly worried because they survived 2008 with all the other banks also, almost all the other banks, but I don't think they're going to survive another time. And remember that since 2008, debt in the US and around the world has gone up three times. And that means that risk has gone up exponentially. So we're talking about, a banking system now that can't afford the problems that they are actually getting into now. And therefore he clearly declares his hand. He knows there would be problems.
And there are huge problems. The banks are also losing chunks of deposits, large sums. I used this recently in my top news program. Let's see. It says here, Egon, global banks suffer 1.555 trillion in deposit flight over 1 year. And in the article we read, not only the USA is affected, but also Europe with 950 billion in the past 12 months. Where is the money going? And they need the money. If it's leaving the banks, that brings them even more under pressure.
Yes, it's Jan, it's 1.5 trillion, not 1.55 trillion, just to make it clear. It's such enormous figures anyway that we can't actually understand what they mean. Nevertheless, it's more than banks can afford, and that's the real problem. Because of course they are also the banks are well, depositors are taking the money out because they're not getting enough return. And the banks have instruction to reduce the lending continuously because their balance sheets are too exposed. So this is a massive problem, and this is going to be an enormous sign of pressure for the banking system that we will see in coming months here. Um, because just as we saw in mid-March, I mean, that will come back. And they have these imbalances also between the assets and liabilities, and the fact that they're earning too little on their assets, on their bonds, because they've placed them long term, whilst they're paying interest on their borrowing short term at much higher rates, and that's going to lead to massive problems in the banking system. Well, it already does, of course.
That was a good keyword, Egon. The Fed itself is losing now a lot of money. An article will be in the box below. I quote, Federal Reserve losses breached the 100 billion mark, central bank data released on Thursday showed, and they are likely to go a lot higher before the red ink stops. That means the deposits from the banks at the Fed, they have to pay higher interest than they get from old bonds. But not only that, I think we are before the reinitiating of quantitative easing, because let me show you and our audience another hammer, a real hammer. This one here, 7.6 trillion of public held US government debt matures in the next 12 months. Egon, isn't that insanity? Close to a third of all public held outstanding US government debt is set to mature in the next 12 months, raising questions about where Treasury might go from there to finance the government's borrowing needs. Where other than QE should the money come from? I think they cannot place this in the market. And if they try, the interest or the yields would skyrocket.
Yes, that matures. And then, of course, the deficit is continuing to increase, as we both know. There are, it will certainly be more than 2 trillion in the coming year, in my view. If you then extrapolate, because I did already, well, before Trump became president, I said, then debt was 20 trillion. And I said, it'll be 40 trillion 8 years later. I said he was only president for 4, of course, but Biden is the second 4 years of this. And we are not going to be far from 40 trillion. We only need a few accidents and we will be at 40 trillion by the time Biden's presidency expires. I don't think he'll be re-elected again, and he might even expire before, of course, because he's not having an easy time, sadly. But you just take 40 trillion and you take, let's say, 5% on that. That's 2 trillion just in deficit because of the interest rates. Just because of interest at 2 trillion. And, so the deficits will go up exponentially. And if you add to that banking losses, which you pointed out now, what was happening in the banks, that will mean that the Fed will have to go in and print a lot more money than what is envisaged today. And therefore, we will see debt at probably, I wouldn't be surprised to see 50 trillion in the next few years of US federal debt. So we are going towards a situation which cannot be resolved by any means. And that's why there will be real problems in the world economy in coming years. And, and that will obviously, which I'm sure you will talk about, affect currencies and metals, etc. also.
Absolutely. And the 2 trillion that you just mentioned, I will put another article in the description box. Even Janet Yellen is expecting exactly this number of deficit. So it's mounting up in an increasing pace. And let's come to China, the most interesting topic for today, because something very unusual is happening there. Let's see what John Reed wrote. The SGE 9999 premium has widened to even further overnight and is now above 6%. I've never seen moves like this, and I've been tracking the Shanghai Gold Exchange since it started. This is the gold price in Shanghai, I think from Thursday, and this is the US gold price. And we see here a gap developing. On Friday, this gap narrowed to 4.5%, but still a lot. And I found another video where the guy there was quoting an article on Bloomberg that is behind the paywall, unfortunately. So let's have a look at his video to show how that looks as a graphic. And here it is, Egon. Chinese gold hits record against the world. Premium to international prices topped $120 an ounce. And this chart goes back, it looks to 2002 or so. And this is absolutely unprecedented. Do you have a clue what happens there before I quote buy from China?
Yes, of course, we think we know what's happening. First of all, John Reed, of course, is the market strategist at the World Gold Council, so he sees a lot of these moves. And what we're seeing here now is a physical market with high demand that is not offset by the manipulated Western markets where there is just paper gold or primarily not just, but primarily paper gold traded and not physical. And this is what we've been expecting for a long time, Jan. We know that the gold price is set totally in the paper market. That dwarfs the size of the physical market. And we know, and we've been talking about before, that once people ask for delivery, and which is what they're doing in China, then there isn't enough physical gold around. Remember that there are 3,000 tons roughly produced annually, plus a bit of scrap of gold. And that's in today's market, which is a slow market, not with a high demand. It's a good constant demand, but no panic demand and no excess demand. But all of that 3,000 tons plus the scrap gold of a bit over 1,000 is being absorbed by the market every year with the price staying at the highs, more or less. And therefore, when people who hold paper gold ask for delivery, there just won't be any physical gold. We know that. And the only way then that this physical demand can be satisfied is not by producing more gold, because we can't produce more gold in the world. We are more or less at peak gold. And therefore, the only way it can be satisfied is, of course, by higher prices. People will got less gold for the same amount of money because they have to pay a lot more for it. And that's what we're going to see that in the next few years. We know that was going to come. We have been patient, Jan, for many years, and rightly so. But we know that supply cannot, and when supply cannot meet demand, which is what's going to happen in the physical market, then there'll be a price squeeze, and that's absolute certainty. When it comes, it doesn't matter. We're sitting here safely with our gold, and we just and insured, and we're just waiting for that moment to happen. In the meantime, we don't worry about the price.
I think this is something that will happen in the USA also. Let me read what Bai wrote. He is a Chinese analyst, and he wrote also on Twitter: the Shanghai price is the real price of physical supply and demand, while the price of COMEX is the false price because large numbers of naked shorts is false supply. So there is no comparability between the two price systems. That is exactly what you just said, Egon. And an article, Kitco, also used this fact and wrote an interesting article. You find this in the box also. Quote from there: China is the biggest gold consumer on the planet. It is the biggest gold importer. It's the biggest gold refiner. It's the biggest jewelry market and one of the biggest investment markets. It has the potential to grow, he said. What happens in China doesn't stay in China. Yes, probably it will happen everywhere. Not to mention that the Chinese economy is also in turmoil. We talked about that in the past, Evergrande and the whole real estate bubble there. It is also a physical demand from people, as everywhere, trying to protect what their savings.
Yeah, no, absolutely. And when you say that the real price is in China, well, it is. I would even argue that it isn't even the real price, because we haven't seen the real price yet. Because the real physical demand for gold that will come because of the fact that the paper holders of paper gold will ask for delivery. That will show the real price of gold. That will show that the world cannot deliver that gold that is necessary to satisfy the outstanding paper claims. And that's what's going to show us at some point. I'm not saying when, because we've waited a long time, but it will happen. Then we will see the real price, and that will be very, very different to what we're seeing today. And of course, to say the Chinese, I mean, they are massive savers. Okay, times are tough in China now. It's not really easy for the consumer even there, but still they save a major percentage of their income, and they also many of them buy regularly gold, which the West hasn't started yet with. No individual in the West buys gold on a regular basis. And we know that it's only 0.5% of world financial assets in gold anyway. So that will come also. And therefore, but you and I don't need to sit here and talk up gold. We know that it's the only safe way of protecting your wealth. It's the only money that has survived in history. So we can just sit on our gold and advise investors to do the same. And just be patient, because the market will take care of the rest whenever that happens. If it's tomorrow or in a week's time or in a month or in a year's time, it doesn't really matter when it happens, because when you are protected, you don't have to worry about the price.
That's right. We cannot talk the gold price up, Egon. We can only bring people into the direction to take precautions and protect their own wealth. Even it is a bit boring to wait so long, but as I always say, rather stay in these times while it's still quite organized, because when the gold price moves to 10,000, it will look differently. Final word, Egon, for today?
Yes, remember that the gold price in itself is just a reflection of the total mismanagement of the financial system and the massive issuance of debt. So it's just a consequence, and it's all throughout history. It has always reflected this mismanagement and the fact that all currencies go to zero over time without fail. So that's why people should just sit tight, because we are likely to have the biggest financial crash in the world or in world history in coming years. Don't know when, but the risk is that it can happen at any time, or it can take a number of years. And it really doesn't matter. When you know that a fire is coming, you buy your fire insurance today, and you just sit on it and don't worry about it. And what a wonderful fire insurance. This is real. You're holding on to real gold, which is actually, it doesn't disappear. It doesn't lose value. It actually increases value as the problems mount. So it's the simplest hedge you can buy in the world, and the best hedge you can buy. And that, we're not gold bugs. I'm not a gold bug at all. I just see it as the best way of protecting yourself, your family, your investors, if you have. And that's why we are trying to inform people here. That's what they need to do, Jan.
That's what we continue to do. A fire insurance that survives the fire. Egon, thank you for today, for the September issue, and let's talk again next month. Thank you. Bye-bye.
Thank you, Jan. Good to speak to you. Thank you.
Thank you. Bye.